And welcome to the Breakfast Club. It is Tuesday, the 18th of February, 2025. Not February. Why am I stuck in February? March. It's March. I don't know why I'm stuck in February. It happens as you get older, I guess. Things were happy in our little worlds. Well, welcome. I've moved you ahead. Now, welcome to March. Okay, let's go. Let's get started in the markets. How are you all doing this morning? I hope you're doing well. We had a little breakthrough, or I had a little breakthrough yesterday. I had some very interesting things going through my head. I woke up this morning with some new ideas. I'll be trying to flush those out today. So I have to keep that idea in my head. Sorry, I must write this down. I hope you're all doing well this morning. You're all set. You find yourself your entry. You got your bias for the day. Mark. Bit. All right, I have it down now. In case my mind forgets it, lets it go. You gotta write things down as you get older, I tell you. Otherwise, sometimes I had some awesome ideas, and then you kind of let them go, and they're gone. Then some obscure conversation brings them back, and you're like, oh, I need to make notes. I just woke up with this idea this morning, so I'm going to try it out, and if it works, I will share it with you guys. All right, let's go for our, let me see if we're live here. We are live this morning. Okay, here we go. Here we go. I'm looking for a return back down into about this Monday's 8:30 candle. That's what I'm looking for. All right. So for today, Kamal, good morning. Yo, yo, yo. How are you doing this morning? First through the door. Welcome, welcome, my friend. Glad to have you here. I'm looking for a little downside action this morning, and then to start off the morning, and then I want to see this turn into a rather long wick day. So I'm looking for the daily high, consequent encroachment, which is also the consequent encroachment of this here candle, and potentially a retouch of the low. If we go past the 50% of this, I'm looking for a run on yesterday's low. But ideally, I want to see it just tap the top of that high inside that fair value gap, which is our first reversal. You see, first reversal. We're right at the consequent encroachment of it already, so this would be a perfect place for it to stop turn around and go back higher. If we come down to the 830 tapper, we're looking for a retap of this old high here 3 days ago. So that's what I'm looking for. We'll see if that we get that. Dal, good morning. D, my man. Max, you don't. The max. Take it to the max. Mahir Ali. I like that. Mahir Ali. Good name. Good morning, sir. How are you? And Craig. Craig, my man, Craig. All right. We just want to see this continue pushing down here to about 830. That puts us right at the bottom of that fair value gap. You see that? Which has now become inversion. So let's bring it. Bring it. Okay, and yeah, so that's what I'm looking for this morning. I'm looking for this to run back up higher, take out today's high or yesterday's high. After tapping this, I want to see what kind of reaction we get off that, and then start aiming for the high. That'll be the run for the day. So 887 to, so it'll be about 300 handles. We have a potential 300 handle run today. ES. We have already driven through this already. Premium levels right here. If ES drives down, that may not be it. That may be it right there. If they leave that open, you're looking for a bigger run back up in that daily range. It'd be nice to see that stay open, but I'd like to see that come all the way back down to here, 56.75. See what kind of reaction we get out of that. And that in 15 minutes, pretty tight right now. 1 minute. Nice little range bound running. So there's potentially liquidity there. I do like this idea of this coming down into here though. You can get through this level here at 56.56. I'd like to see that keep coming lower. Remember, we're looking for a reversal today. See where we're headed already. So we see it accelerate through here now. And if we run through, if we run through the mean threshold of that, the only other spot I have left is 668. If this rolls over here now and closes on the day below that level, then 668 is your next objective. Okay, let's carry on here. I'm looking for, what are we looking for here? Oh, we're capping up a little bit. Good. Got to keep an eye on my trade there. All right, so we got to get up above that key level there. We have to get above that. All right, let's got to get above that key level there. Copper finally hit the level we've been looking for weeks now. We had that sitting up there weeks ago. We put that back down in February. It hit that level, hit it again, and now we're looking for this upside level here still. So that hasn't changed. I got a whole new commercials coming at us today. Stand by. Oh, there are two in a row here. All right. Natural gas. Again, more upside here. Got to find some support off the bottom or on the top of this inversion here. I want to see that use the support, or we stay inside this fair value gap to keep pushing higher. So you're between here and here right now. Gold still pushing higher. HNC, come on, baby, get up there. Wheat, we got that upside box that we're aiming for. We're just shy of it now, so we've had that on there last week, and we're just reaching it this week, which is good. Soybeans, we're right back off of soybeans high here. I'd like to see some sort of resistance here and still look. I'm still aiming for these sticks down here. So until we get above 102 on a close, this candle's high on a close, I'm still bearish. Sugar, still bullish on sugar till we get to 2045. I only see some support off of this level here on the 1 hour. You can come back to there. Nope, that's it. I'd like to see that just end right there now and start heading higher. Aim for our upside objective. We've hit our downside objective in coffee, and premium arrays already hit. So there's like a lot of liquidity sitting up there in coffee at that specific point. Just go back here, hit the objective, just so you know. Now you want to see how it reacts off there. Where are we at next? Live cattle finally found its objective today so far. It's good. We can get through 205.95, look for higher prices. Cotton, I'd like to see cotton hit our little box here we've had drawn out today, and then keep marching higher. Little piggies. I like to see these guys get back up into that volume imbalance above us. And that's little piggies. Okay, let's go over to oil. Hard when I'm kind of distracted by what's going on over there on the other chart. Crude oil. Reach for this order block up inside this little range right here. You probably often trade entry reversal. Look for 60%, 72%, or 70% of that range. $62% right there, right off the order block breaker here. Where are we at here? So I'd like to see us come down to 67.92. $67.92 puts us back at this first value presentation here. First presentation for value gap. And let's look for, so you're looking for any reversal up around 67.92 to 67.69. 67.69. So keep your eye on this first presentation fair value gap that we had on Monday. Let's see if there's a yeah. Look for any return back into that area there. The fill of this fair value gap all the way to the top of this one here. It could come all the way down to these candles at 67.72. Gold. We talked about this yesterday or a few days ago. As soon as it got above this level, found support, we want to see it leave. Look at this right here. You guys need to see this zoom in here. See how it went? Well, let me move this to the side so it's not confusing here. See how we had a body break above here, come back, perfectly tap it, and keep going. So remember when we did our little fib projection on what we thought it would go to in terms of our standard deviations and stuff? There's two, right on the money. That's where it just hit today. All right. So that would be it. You'd be, did you take your money there at 3,000 and take it out at, or 3,005 to 3,040? That's $40, which is huge in gold. And if that continues, so if you're looking on an hourly chart, looking for a reversal, wait for the reversal. If you're committed to holding onto it that long term, you want to see this turn into a fair value gap right here, this BISI. So you'll see this hour close at 9 o'clock. But remember 9:10 turn. So this would be a great place for a 9:10 turn for this to stop us, the TIBs, for this to turn and start coming back down. So if you see 10 o'clock starting to come back down and it drops and closes below this and 11 comes back into it and retraces 75% or 50 to 62% of that range and then continues to come lower into lunch hour, back into here, you would have caught a perfect exit. I'm just saying, it's up to you to decide what you want to do, but that's basically what I'm looking at there. And yeah, so that's that for gold. Somebody was talking about this yesterday. I think it was David was talking about gold miners on the weekly level. These guys have some, I think the monthly level was the one that had this huge run up there, yeah. So these guys have got a nice little pop above these old highs. That's the first level I'm looking for right here. See what kind of response you get off that on a weekly level. Oh, I want to see UNG pop off of here. Off these relative equal highs here and start moving higher. See, there's a lot of commercials this morning. Sorry you guys have to endure those, but we're going to do good things with them. Bitcoin, it came down to a preset level. And we've had a nice reaction off of that. See how we act all the way up to this point here. This is all potentially bearish. From here, we wouldn't be bullish again until we get above here. Just inside that range alone, I wouldn't be bullish on that until we get above here. It's a 5-minute hourly. So 82,592. Yeah, it's already done that. Yeah. You might see a wick just up into here, or just this body, and then roll over and come back down. I think it's still bearish, looking for these equal lows down here, and then eventually this guy over here for Bitcoin. On the hourly level, you've got to see Bitcoin get above this high. My beloved peyote. Relative equal highs above us, so we're still gunning for that. And then this premium level above us here. It's not like that. Walgreens, something must have gone on with the discussion of the takeover. It makes me wonder if they got this discussion they have about a lawsuit, big class action lawsuit, and then they somebody wants to buy them out, that it's going to be like a hostile takeover or something. You know, this is just conspiracy stuff. Walgreens got a bunch of liquidity sitting right here. Looks like they're running both sides of that out. We got liquidity above us here. Disney didn't quite hit the high from yesterday, but now we've got this tree below this low. This is what we were talking about yesterday before the reversal. This is one you got to be careful of, but now we've got a new one right here, and now we're closing. We're already wicking below that, so you've already got to change up right here, Craig. And if we're coming back into this range, and today the markets were not closed yesterday. That shifts all my stuff around. So today is a turn day. Today's the day we make a turn. We make a turn. All right. So if this is the turn day, this is a daily hourly. We can see a run back into this level here, Craig. Look for a retap. You know, if you're looking inside this small little range right here, right now, 50% puts us right here. You start getting below that level. In the next hour, we use this as support. We're looking for a run back deeper into this level here. And if we overtake that, then 50% of that level is going to be down here at 98. So keep that in mind right now. See how we make the decision at the end of the hour. So wait and see what you get. Let's look at the banks. The banks were on a turn here. This might be your turn. End of the month, near the end of the month. That objective right there, that looks really good. These look good, Gary. I'm telling you, they look good now. They're getting better. I'm liking them. DAX. Forward. DAX hit our upside objective already at the 23,406. Finally hit that. I haven't done any more research on that, but whoever was asking about DAX before, you're welcome. There you go. Levels are hit. Euro, we had this all pegged out this week. So we're looking for, this was the first objective. And then we wanted to see it come back down here. And then here we had multiple different ideas of where it could run to. So right now we are seeing our continuation. We're down at the bottom of this. So we're looking for this first run to the premium objective. We want to get above here, use it for support, and then make it our way to that premium objective in euro. Okay. US dollar. We're still heading for that discount array below us here on the daily. That will push all the rest of these higher. So we're looking for this to run up into, take out 64.09. Look at this nice response we're getting off of the New Zealand dollar now. How delicious is that? Love it, love it. Now there's our upside objective in New Zealand dollar. And CAD. See, look at that. Look at the difference between Canadian and the American here, or the Australian. Let me put that on the like to like here. These guys are busting out. Canadians just head in the sand, man. Head in the sand. We got to get below 142.08. on a close to continue dropping our Canadian dollar. Otherwise, everybody else is doing better. And the Japanese yen, just shy of that upside goal. Just shy of the upside goal. And let's look at silver. Silver finally hit. No, it hasn't hit. Let me just move that over a little bit. We're looking for that to continue running for that last little portion of our premium box here. And E-split. All these are ETFs that are just about to be on a turn here. We'll see how that ends today. And then we can get back to our regularly scheduled program over here. So bouncing off that for 8:30 on Monday. I want to see a nice little reversal here now. Hunting for reversals. We're inside here, so we're going to make that on an hour. We're going to make this at 15. A regular trading hour gap's right above us. Fair value gap starting right here. Let's say good morning to everybody here. Morning, Max, Craig. Good sir. Well, very down as blown all my accounts trying to learn ICT like you, but know where to start, but don't know where to start. Oh, my here, you need to stop trading live funds, man. Stop trading live funds. You're going to get caught up in the excitement of all the people who actually are maybe making a little bit of money here, but you see the excitement of people in here hitting trades, and that really draws a lot of people in, that whole mob mentality, especially if you get a lot of people that are, you know, hitting a couple of nice trades. Study your stuff, man. I spent thousands of dollars making that same mistake you have, and I promise you, it's just going to bring you a lot of pain until you figure it out. If we make it look easy, it's not as easy as it looks. You really have to get this under control. Okay, you really do. Otherwise, you're going to pay the reaper. They're going to keep emptying your accounts. And if you're trading live accounts and trying to learn this, that's the school of hard knocks, man. That's like paying full price for your education, and you don't need to. You can demo this until you get yourself something solid, and you'll realize that it's really not, it's got very little to do with looking for your setups and all to do with here, what's in your head, and having the patience to recognize when to get in a trade and when not to get in a trade. And if you don't have that under control, you will continue to blow accounts over and over and over again. You should only be demo trading this. Until you feel confident enough to put live money on this, you should only be demoing this. Don't try to learn ICT stuff with real money. It is a recipe for disaster. It really is. That's my only advice to you there, my friend. Just keep turning up. Turning up every day, man. We turn up every day, and eventually it'll start to click for you. But you got to study the stuff. Don't get caught up in all the hoopla and all the other passion of all the other people. You got to really focus on your learning, because all you're doing is just going to keep prolonging it. You're going to kick the can down the street a little longer. So you got to stop. And your first part of your discipline is stop trading real money. If you keep blowing your accounts, unless you're blowing demo accounts and you're practicing your trading, that's fine. But make note every day about what's going on in your head as well, because that's the unsung hero of all trading. It's the discipline, the rules. Those things are the things that will make or break whether or not you'll be a decent trader. At least get you to a break-even state, right? So, yeah, you'd be super careful. My advice is stay away from live money. Don't look at prop firms. Don't look at any of that other stuff. Just focus on the learnings, the materials, and wait for the setups. And if you can sit here totally calm, make your trade, say, I see my entry, I'm not touching anything else here. You're not ready to put live money at that. You're just going to create a whole world of anxiety for yourself. Donkey, good morning. Adi, 880.20. Yeah. I think this is just, they're just engineering a little bottom here. They're going to run that out around 880 and then push that higher. I like the way we're banging off of Monday's first presentation. There's your 880. There's the bottom of the first presentation. Look for 816 to 852 now. And we'll see how we act in here. $816 to $882. 816 to $856. 823 to 856. Monday, 6 a.m. Let's see if we keep pushing down here. There's 856. What's the low of that candle there? 847. 852. And what else we got here? Good morning, Campione. Good morning, Peter. Looking to buy crude oil again today. Good morning, Abs. Russell. Disney's bringing it up. So we want to see if whether or not this trades through and we start to get higher off of here. And if we continue to roll over, I'm looking for that 820 level. Morning, Shepherd. Hi, man. Good morning. Why did we make such a huge gap in NQ? Why do we make such a huge gap? I don't know why we make huge gaps. I don't know the reason for that. I don't know if that's an ICT, understands the logic behind that. Well, there you have it. I'm out. I'm short from there to there, and I'm out. Now I'm just waiting for a next setup. So if we blow below that level right there, I'm rethinking this whole thing here. Where are we at for daily? Oh yeah, okay, right here. 784. I'm just looking for an opportunity now to see a reversal. See if this starts to go higher. If we start to eat through this into this 675 area, we close below here, look for yesterday's low, and I run into that 675 level. Paper trade is king until you are consistent, build your balance. I agree. Don't even waste your money on prop firms yet. So looking at 791 and then yesterday's low. So 791 puts us right in here. Yeah, that puts us right there. So we'll see what kind of reaction we get in here. And this could be just a rocket. If it all goes through one candle all the way down into here, we're going lower. Well, that is certainly, I'm just totally hunting for I've got the field now. I'm just hunting for this, a reversal here. Okay, so 880, what is volume and bounce? Volume and bounce, gap between candle bodies. Crab, Esther, volume and bounce, gap. Thanks, volume bounce, you're welcome. Not huge gap, contract, rollover. Good morning, everyone. Coffee is ready. Good morning. I'm Mardeep. Chris Alley, 778 is 1 hour fair value gap, consequent encroachment. That's Monday's 8:30. Where's today's 8:30? I haven't put that one in yet. Yesterday's low. $765. What's that? Yesterday's candle's low is $757. That's right there. We've taken yesterday's low now. Now I'm hunting for 679. 679 to 654. Like this little imbalance right here. Just run out the low. Still look this potential down here. This would be like the line in the sand. I really want to see it stop right there and start going back up higher. And just enough to take out yesterday's low. I like that. We're looking for a D. I like this 930, and I like that little imbalance right there. But I don't want to see us trade below it. Like that. Otherwise, we're coming lower. And you're looking for that 675. Now I have that imbalance right here on the daily. There's nothing there yet. Might be bullish on oil, thanks. On oil. 15 seconds is giving you a reversal. The 15-second chart is a reversal right there. Back up inside that range. That's 50% right there. Didn't yet on the 1 minute. Potential for 672 to 654. 672 to 654. So a reaction we get in there. You're buying Disney. Well, if this is your next price leg higher, Chris or Craig, you're looking for, just look for the potential, because you're just below the 50% here now. So if this goes bullish on you from here, you want to see another price leg higher. You're looking for something like if that's the low. I just want to see if this will give you a confluence that supports that idea. We'll put you right into this imbalance right here. Right here. That puts you to yeah, if you look at 2 standard deviations from there, that puts you right into, if we get another drop down to 1 or to 98.71, 2 standard deviations will put you through this gap here. Clean up that gap. Makes any sense? Oil still got 67.92. It'd be nice to see that stay open now. But we got relative equal lows, so I think they want to run those out first at 6.92. See what kind of reaction you get off that to go higher or lower. Bitcoin came all the way down to our discount box here. These guys are doing good. And they pay a dividend, which is nice. Every month. So 4 more minutes, and we'll see if we get a turn here at 10 o'clock. There's the 67. Not bullish till confirmation, just watching and waiting macro ahead. I'm usually not a huge fan of trading rollover days or the day before FOMC, just hanging out right now. Good idea, Peter. 1 hour chart, run up the premium box. 69.30 for oil. Okay, buying Disney since I'm bullish. Morning, Lambo. Looks like deeper retracement on gold. Thought it might bounce off the 50% Peter A, not gold, oil. What are you looking at for that gold? One of those we're looking at for it to turn, are we not? If it got below a fair value gap. That's the 1 hour. We did not have a fair value gap form there. Okay. There's 2 standard deviations right there. 10 o'clock here. So we've run right to the very bottom of this imbalance right here, and we've come through the mean threshold of this candle. So now all bets are off for long right now. Look for this continuation on the downside. Look for your rejection block. Shooting through this, coming back into this. See what rolls over here. The 4 hour, you said? 4 hour volume imbalance, you said? Mm-hmm. There's another one down here at 507.1. Immediate rebalance on a 4 hour. We're just waiting and hunting. That's 4 hour. Now, if we get a return, wait for a structure break here. That's a nice little bounce off that discount raise. If you're off of here, a D, good for you. It's a nice little catch off that hourly discount box. Got to see structure break to get above here and start looking for a higher run. Inside here, there's nothing in here on a 1 minute chart that gives me excitement for a run up higher right now. You're inside that range there. So if you're risk-free, Hadi, that's a 70% optimum trade entry reversal right off this order block. So if it does go down one more time, I'm looking for a little bigger dig into this. Say that fast, hey, big dive into here. On 15-second, you found a reversal. Yeah. Got it off the high here. Run back up. That's good. Again, I want to see a break above these highs here. Get out of this cluster, but there is a reversal right there for sure. You just catch that one there. Run above the high here. Find some support off of here. You could go long right there. Right off that high. Now I want to see if this actually I'll run it for this take profit right there. I don't want to see it get below that level right here. So stop, we'll go here now. I don't want to see it come lower than that. That'd be like half that fill. Too much waffling. That's going to take me out there. I'd be surprised if that doesn't take me out now, because we've waffled here. I want to see it just come down, tap it, and leave. So if we get it, we get it. If not, then that's it. I don't want to see it come down to there now. It's done its halfway. Oh, it's a quick snap through. Right to the discount box. Too much waffling. See, I love that idea of that. Too much waffling there. Then you go, if it's not clean, then you're in more high resistance stuff. So it was a sample test. Not a good one to take. Got to go with my gut on that one when it starts waffling. So let's wait for something cleaner on a 1 minute chart. It's high resistance, so maybe it's just a sit around and wait day. Is there syrup with that one? Yes, exactly. It was nothing sweet on that, that's for sure. That was sourdough, man. Well, the 15-second chart is no different than what we're looking at on all the other charts, Craig. You're just catching it quicker, that's all. But you got to be prepared to see, like, this is all high resistance. It's not a nice smooth entry where it drops down, comes back into it like a level, and then leaves right away. That's what you want to see on any chart. You don't want to see, even on a 15-second chart, all this waffling around here. You don't want to see that kind of stuff. So you want to see your price action clean. Probably don't wait or don't get involved in this kind of stuff when it's back and forth. And you see these kind of wicks on a 15-second chart. That's some serious high resistance stuff going on there. So that was our sample attempt just to run for a quick liquidity up here, and didn't get it inside a range. We're already above the premium level anyway, so, or about the 50% of that range. So it was a risky trade. That's why you got to pull your demand of price, what you want, and then this just back and forth. You don't want to see that. You want to see just a tap and go. So we'll wait. We'll wait for the markets to clean up a bit here. Let's get back into a 1 minute chart here. Looking for that 1 hour discount box to finally get filled, or at least tapped. I don't think it actually tapped it yet. No, it's just shy of tapping it. So we still have that discount area here yet to be hit. And then you've got the 4 hour below you here. So we'll see how. Oh, you on those. Look at some other ES. ES is already through that high. We're back into that imbalance here, that inversion. These are all marked contracts, so we can switch over. Are we switching over yet? Is it open interest greater in these new contracts yet? It's all choppy for sure. Oh, wheat is reaching for that objective up there. It's good. Soybeans, still nothing there. Look for coffee to close above that level. That 383 level. Mean threshold has been hit. See what kind of reaction we get off there. If we get a retracement back into this and then another tap off that to go higher, like to see cattle start to climb up. Get back into this level. Still looking for that. Still looking for cotton to get here, and looking for hogs to go higher. Oil, change, run. Discount boxes down here on the hourly. You're out of here. Stand by. That's downside for oil. Right, have a good day. Let me know you got there okay. So I'm looking for oil to get down into here, or yeah, oil to get down there. Gold, 15-minute. You got your reversal here. Get a structure breakdown here. Look for this and this to provide a level of support to come lower in gold. UNG, Bitcoin, see what kind of reaction you get off of here. We still have one more level below us here. Look for this level right there on Bitcoin. Let's just taking out the high. Mosaic. Look at that. That has gone up 15% since we looked at it, since Craig pointed that out to us the other day. And we were looking at down here. So there's 15% return. Relative equal highs above us here. And the premium box sitting right here. So that's a good one, Craig. I hope you got some action off of that one too. You're right in it right now. Premium box. That's a good one. That was a good trade right there. Look at Disney. So we get down to a lower time frame here, see what's going on with Disney. So we had that little plunge down into this little premium level right here. And this is the one you want to see it hold. Oops. From here to here, you want to see that hold price and start pushing higher, and it's got to close back up above here. Yeah, it's going to close back up above here, and then you've got the next potential price leg higher. Ideally, you want to see a body get above 99.68 on a close. Then I'd be looking for this as the next price leg higher, Craig. Else there, silver, still looking for that. Well, that's an uneventful day. Great if you caught a nice little downward run this morning. High resistance. Well, not a tradable stuff that if you don't have a lot of experience, don't participate in these kind of environments. Looking for, premium and discount arrays as they sit. This is the premium. This is the discount. So you can see how we traded above it, traded into it, aim for the premium array. You hit it right here, hit it one more time, came back into 50% of that range, hit it again, and now you want to see if we can get through it on a close. A little tiny imbalance there, so I want to see that start climbing above that now. You've got a little high taken, so look at your next one right here. This is how you kind of practice on those higher time frames. Even when it's sloppy like this, watch very carefully. So you got to be quick to see these ones inside this range. Discounts right here. See how we closed right on it right here. So here's your discount one. So just keep drawing them out and practicing them so you can see how they're like really tight. Closed on it, dropped below it, came back inside it. Now we're going lower. Look for range extension and 50% of here. If we start trading back through it, then you're inside this small little range right here. So look between that one and this one here. We've tapped it. I expect to see this run lower. That's what you want to see. You can run all the way back up into the top of that and then roll over and come back down. If it goes through it like this, then upside premium array. Where does it close? See, it's just closed slightly above it. So come back down, tap this and start pushing higher again. And if it closes below it, you're looking for range extension. So you want to see it literally freezes on it. So this is where it gets super sloppy, right? You want to see it top, give you a nice clean pop above. Look for this mean threshold here and start running higher. So we want to see that run lower. Mean threshold held, ran back through it, used it for support, push higher. Now we've stopped right in here. So now you want to see a body's closed above it. Now I want to see that push higher. So we've opened above, came all the way back down into the discount again. That wick, look at the damage that does, hey? These are small ranges, so we're still looking for this to go higher. Now extend the range, and we just did there. Now you want to use some support off of this level here and start pushing higher. So I'd look for, that would be like a buy right there. And if it trades through here, so you're gonna have to put your stop down in this discount box here if you want to see that hold price. And you want to see it extend above this range high here. So that'd be your take profit there. This is like super sloppy, so I'm not encouraging you guys to take these trades. I'm just trying to trade this right off of what I'm seeing here. And if it trades below it again, I'm going to close. I'm on the wrong side of that. It keeps coming back to that discount box. So it feels like it wants to run these lows out here now. I'm just below that discount box. So if it takes that out, then looking for an extension down lower. And I'm not trading this live, by the way. So I'm just trying to stay in price action here. So we're below it again. Now you're looking for support here. This is how you can get really tight consolidations. And when prices just keeps running back through those premium and discount boxes, look at how much price is banging off of that level. Very precise levels, but you see how sloppy it is in here. It's not acting the way you want it to act in terms of a clean price entry. So trade below, come back inside, range extension. Look all the way down at this one down here now, all the way down to here. We have a small fair value gap here. Way too sloppy. Oh yeah, very hard to trade this. Wicks did some damage, but you're still above this level. Now looking for a premium. You're through the premium level right here. Now find support at this, and again, range extension above. Look for a run above these highs and up here. Body's above it. Look at that, just rip right back through it again. Super choppy. Right back off that premium array. Tap. Now cleanly, you want to see it just tap it and go, start going higher. You don't want to see it start eating through this level again now. You just want to see it snap off of here and accelerate, going higher. It's good. Now your body above here. So you want to see this whole candle here hold support now. So if you just draw that one out. See how far down it comes into it. If it trades through it again, there's the reverse. See how the body traded below it already, came back inside it. We're already out of it. Discount arrays down here. Hit that. Skip this one now. We're interested in this one. So we've traded below that. Jesus, we get 2 commercials at one time now. Okay, enough freaking commercials. Okay, so see how we traded below it? You have a run above the high, inversion, trade into it, come lower. Sorry, trade below it here, come into it, go lower. Discount boxes hit, box to box. This one here, just shy of tapping it again, and you're back up. You just keep tapping it here. So we're either going to roll below this one or above this one again to extend higher and lower. So those are the 2 inside that small little range that you're looking at. So keep your eyes on those 2 and watch how they act inside there. So this is good high resistance training practice here just for studying price action. Don't engage the market, just kind of watch how they react off those levels. You see a body get above here. See, we've seen a body get above this one now. Come back and tap it. You expect to see range extension now. And we're still stuck inside this one. So there's that larger range premium. You want to see a body get above here on a close. And then you're looking for the relative equal highs to get taken up here. So this is kind of the importance of seeing these levels and watching body versus wick. Mean threshold is holding price. We've traded below it again now. You're back inside this range, and there's a little imbalance right here. Well, you won't be able to capture the whole thing, but right there. There, now you got a body above. Tap the top. Old highs. Take the high. Come back, find support at this. Then you want to go higher. Clean is right, tap it and go. There you go. That will be starting to clean up a bit if that did just continue to move higher now. So you can see how all those levels are bouncing around, all choppy, then it finally pops up, comes back, gives it a clean tap, and then off we go. So you want to see that continue to go clean from here. And you can see how quickly it'll clean up and continue going higher. But again, you got to make sure this finds support here now and then goes higher. So you want to see that just keep climbing out of there. Let's go to the 1 minute and see what we see here. Let's clear all that junk out of there. It's already sloppy enough as it is. Don't forget this little guy down here. One minute, come back and tap the old high. This would be the big candle it's buried in, so I'd want to see no more than this. $7.01. Just keep climbing out of here. Just came down and tapped that discount box right there. Now you got to run back up. If we can get back through this premium box, find some support at that. I'd like to see us dig through this consolidation of this cam model. 757 upside. I'll be right back. Let's go. Quickly turned on us, eh? Well, how do you like your chop? Ground beef. That's a ground beef moment, man. Wow. Look at that. Even that little gap there, just below that level. There's nothing really down in here other than right there. Just what we just tapped. Hard read today, guys. Guys and gals, it's a hard read today. It's one of those beat you up in the market if you try to participate in this kind of shenanigans. So that's gone. Stay on the horse, you guys. Keep practicing it. This is when you find out how much resilience you have. It's not about trading it, but it's about studying it and staying in it and just practicing, seeing what levels it kicks off of and how do you find support on them. And it's the only way to practice. The only way to know is just to keep practicing. That was the 1 hour, was it not? Next macro is about to begin. This could be a huge dive. You can see a big dive here. If this starts to going, this could be a massive run below all of this now. So you're off this breaker. And I want to see us get through 50% of the wick. We can close into here and then use this to go lower. I'd like to see us start to eat into that 1 hour discount array. If we really start to accelerate through here, then we've got, then I'm looking for those old lows from the previous day. Oil is, you want to see it run these lows. Right into immediate rebalance. Didn't even see that one right there. Immediate rebalance right there. Get rid of this one. It's got to get above here, Craig, for you to go bullish. We could still see this run down into here deeper yet. And down into here. So if you get above here bullish, then you're looking for 50% of that run there. It's really choppy as well, so I wouldn't be too excited about that one either. There's your gold. We're inside this order block. You want to see structure break down here first before you consider getting any lower on that. Got to get it back above there. This could end up being one of these. Look for a pull all the way back into this range here, Craig. Right into this premium or this daily inversion here again. Up inside the breaker again. This imbalance here. It's not the BISI side or SIBI side, but we got a trader below here. I'm looking for this to start running these lows now. Keep coming lower now. If this just bangs around inside here, you got this upside objective here. And it should accelerate to that rather quickly if it does. Get above 680. Then I'd be looking for a run back in here. Watch for this to close above here. If it doesn't, still going down. Literally right on it. Ah, there you go. Above it, tapped it. Now you want to see it accelerate. There you go. We wanted to see a rapid rip up there. And there you go. That's just trying to stay on the horse, you guys. Just trying to stay in price action and see how quickly it can turn on you, right? But that's where you got to look for those peak levels to see if they act the way you want them to act or not, right? So look for that premium box to get finally nailed. I think it's just shy of it there. So I'll be looking for a retap of that. So I'm not looking for down here right now, just because we broke this level. I'm going to say tap it and accelerate. It was a quick snap through, but we didn't quite tap that premium box yet. Crude is calling me. Is it a crude call? Is it like a cat calling you? Ugh, Craig, that's just messy. That's slippery, oil, sloppy, crude. You've just come back up into that premium box there and you've rolled over now. So you'll be glad you didn't take that. Hourly tells me everything I need to know for the last hour. The hour candle tells me nothing, but it's flat. So basically you've banged off this premium box I've pointed out here in this discount box here. You just ran back and forth between those two. We're still in some chop, so. Yeah, wait. No daily, and the next daily is hanging near the midpoint of the daily order block candle body, so we'll either reject it there or out this afternoon while I'm playing golf, that is. Yes. The daily. Where is the daily? Yeah, right off that mean threshold. So it's either gonna, and we're right back inside that imbalance still, right? So we either see where the body ends today. If we end here and come back tomorrow and start marching higher, and Tuesday is the low of the week, and then we get the swing today, then tomorrow is the turn. We're expecting a swing today, but I wanted to see a swing high today, not the swing low. But if we get this as the swing and tomorrow we just open up, don't come down and take that low anymore, and we just continue to go higher now, I'd look for a run back up into the low of this candle, the mean threshold, open, or sorry, the consequent encroachment, open and mean threshold. Those will be the upside objectives tomorrow. If we see where today ends inside this level here and mean threshold of that bearish order block. A whole lot of nothing. You didn't miss anything there. Yeah. Okay, so I'm basically right now between this order box mean threshold and this premium array up here. This mean threshold continues to hold and we continue to roll higher. I'm looking for this old high here and this premium box. There's no discount box here. All we have is this mean threshold. If we lose that, we have the hourly discount raise, which is what we're taking now. So we'll see where that one ends. If that ends there, look for these to provide some support, or at least this one here. Look for this hourly, 2 hourly levels below us. right there. Now you want to see that. Give this a little kiss and then start coming lower. Yeah, was just like yesterday morning, super messy. There's the discount hourly, right on the money. Now, if we get this acceleration, like I said before, this could be a huge rundown now. This could be the start of a massive rundown. I say massive. This is what I mean. $14. That'll put you right in the middle of this, in the middle of this wick here. Just below it, tap it. Still want to see this start shooting through here now. We've already eaten through that mean threshold. So I want to see the next big rip in price leg right down. $634. So just looking at this one alone here, if you took from here to here, it still puts us in this 78% or 88%, no, 78%, 79% retracement on this whole range here. Right now we're still finding support inside that lower discount hourly box. We'll see where this ends today. As long as it ends up above that level, we have to see how the day closes. So 644. You get above right here. I'll put that little line right in there. Discount box is still holding. Smart me going for lunch. Did you get that in gold or oil, I should say? Yeah, look in that discount box down here still. It's got some work to do today, Craig, if you want to see Disney start going higher. is off that discount box. I want to see some structure break though. Let's get out of all this mess here. So if we can get above this level here on a nice displacement candle, come back, create a little fair value gap up there would be nice. And then start to leave, start to clean up this price action. You're always concerned that 11 o'clock, 12 o'clock may come down and just take out this low one more time before going higher. Ideally, that's typically what you want to see is up 12, take out 11 o'clock's low, and then start marching back up for the rest of the day. $11 always seems to be that, look for that first fair value gap off of here, and then a key up, come back into that range. You want to see this accelerate through here and start reaching into this level here. I want to see it start picking up some speed here now and get into here. If we come back and tap that level one more time. So remember, if you haven't got in on this one here, the bear trap or the bull trap in this one is if it comes up to here, rolls over and you think, oh, it's going to go higher, then it rolls over on you and you get caught up in that bull trap. If you're past the 50% of the range that you're in right here, you always want to make sure that you're waiting for the high to get taken first before you and get confirmation on that before you enter in. Otherwise, you get caught in a bull trap here and it rolls over and comes back down on you and takes out this low. Then you're like, I'm definitely on the wrong side of that. And it comes back against you and starts the next price leg lower. And when you're looking at time, 12 o'clock, you're looking at that reversal anyway. So if you're looking at that small range from high to low already, you're at 50, just shy of 62% here. Optimum trade entry, reversal, 70% would put you right in a fill of that fair value gap and deny you going higher, and you get caught in the bull trap. So that's how you got to kind of look at those traps. So here you'd say, I want to enter in on a midpoint or discount. So if I'm wrong, it trades back into it. Before it takes the slow out, I can get out of my trade at break even. So level 1, level 2, and level 3 for entry. The safest one is right here, because if you're wrong and it closes below it, taps you, break you even, and then run for lower prices. And watch time and price, right? So Tibbs now brings you into 17, 16, 17. There's your first entry. So if that reverses and goes higher now, so 16, 17, 18 is the next minute. 18 will put you here. 19 can put you here. And then you start seeing the next price leg higher. So there's your first entry. Premium raise right here at 680. To 675. There's 675. Now do we start to move up into 680 and get through it on a close above 680? So here's where that bear trap, if you did not get your entry in down here below 50% of that range, then you wait for this to get taken to the upside. So you got to wait for this fair value gap here to fill, come back, use this as support and go higher. Just a wick only. You want to see a body get above here. Ideally, you want to see a body close above this, tap it and leave. But you might get a wick day all the way through that. There's the fill, so you'd pay yourself off there to here. Move your stop loss to break even. If it turns on you here, that's the bull trap you get caught in. Remember that range? You catch it below 50% right here. You run to 60 or 50%, move to break even, take a portion off 62. There's 70% optimum trade entry reversal. Here's where the bull trap can get caught, can catch you out. So as soon as you pay yourself there, it came back and tapped you out at 60% right here, 62. So now you move to the sidelines and wait for this high to get taken. So you make a small bit of profit in here and you're out, and wait. Because if it rolls over on you, you'll be happy you took a discount to a premium, often trade into reversal, and you give yourself an opportunity to catch this when you're on the wrong side of it. You have a reversal starting right here. So if you trade below that, you'll see it at this level gives support, and then look for another run back down into 632 again. Looking for a short off of there, you could look for a short off of there if you're a breaker trader. If you look for a consolidation, there's a CAM model 2 there. You know, if I take from low here to high here, that's a CAM model 2 entry, or just shy of a CAM 2 entry. So there'd still be a CAM 1 until you hit 50%, but that's a fill there. If you roll over here and say that's a short off of there, you've gone to the premium box and you want to go to a discount box, I'm all for that. Box to box, and then you expect it to come back to box again. Yeah, absolutely. Funded, you could do that. That's like being super confident that you're in a premium. You haven't hit this discount here yet, other than, I don't know even if it hit there. Yeah, I think it hit there. Or did it? No, it did not. So it still didn't hit it here. So if you hit that, look for this discount box here to get hit. Now, if on that premium to the discount, 70% optimum trade entry reversal, which we talked about. And that's why you pay yourself on the way up. Now on the way down, if you got yourself a discount there, or you catch a discount below here. If it breaks market structure, then we're heading deeper and you're pretty much inside that range anyway. So you had a perfect exit here at 70%. You got to change in direction. Watch for 660 to get hit. Right there. There's your 660. Now you want to see if it closes above this. And now you look for the next price leg higher. Right there. Hits it perfectly. That's your best short. Because if it trades above it, comes back, taps it, you can get out because it's going longer. So that's your ideal type of place to enter for a short. And if you're wrong, then it pops through it, comes back, taps it, get out of the trade. So you just kind of pretend like that was the short right there and see what happens. So just kind of note what you're looking for, and you're looking for your discount box down here. So you're going from premium to discount back inside this area right here. So I'm going to take the hourly off now. Just move that to here. So watch right there. So be careful. Just watch right on that 666. Saying you're already tapping that side beat. I get ready to get out. Stop loss is sitting here. If that runs and takes you out all in one candle, you know you're on the wrong side of it. This is your fail-safe candle. So we're assuming our stop loss is sitting right here. And you're out. So that's the direct run to your stop loss. Yeah, you're going to take hits like that. So now you want to see if this body closes above here, you use this candle to this wick. You don't want to see it get back lower than that. There is some imbalance going on in here too. So now look for this next price leg higher. Look for that premium box way up here now. We've closed above it. You want to see this really accelerate through here now. See now, here's where you have that reversal. And because you didn't break market structure to the downside, there's your bear trap that you're going to go lower. Because it took this low out, you came back in and tapped it. So there's the risk of the bear trap because you did not break market structure here. And you've already come back inside that range way more than 50%. So that's the bear trap illusion there. See this little imbalance right here? That's the highest one. After this one, it's this guy. And look at it right across to there. We find it closed above it. Now you want to see that come back, tap this or the top of this candle here, and then go like with intention, like get out of dodge now. Right off the top of that high, institutional order flow entry drill. Start pushing. I wouldn't even want to see it come back down in there now. It should just accelerate through here. And it's still kind of choppy. If it starts to come back into that wick again, that's the kind of stuff you don't want to see. Do not revisit that wick. You got to get out of there, man. Straight up. Let's go. Guess you can come right to 69.79. Bottom of the hour. So this could be at this swing and take us all the way back through here now. That's not what you want to see. You want to see that accelerate through here. So back to this order block high, which we just tapped. It's close and its mean threshold. You want to see this, no more than 50% of that. So that's your consequent encroachment of this candle. Right here. And you're already through it already. So the last piece is that 25%. You want to see that stay open now. And then that turn into a bull candle. That's your last D level graded response. And if you lose that, then we've already lost one imbalance, two imbalances, three imbalances. And we're looking for a run back down into this discount box here. That's when you know it's not looking good, when it starts to come back through that wick. You go, I don't even want to see it coming back in here. And then it loses its luster. Always keep in mind these little imbalances that you see, and you got to stretch out your charts to see them. As soon as that closes through that you treat just like a fair value gap. That price imbalance, it comes back inside that. Comes back. Or as soon as it breaks that low, then you think it's coming deeper into this range. Now you want to see it accelerate through these levels. Because if all it did was just come back into a discount portion here, and as long as we're still trading above the premium and this order block, there we're right back into that level. So you want to see that pop through, find support, and then start marching higher still. And if it doesn't, mean threshold is holding. And then we start to roll over. And if we get below this level right here and here, all through here, on a close, look for a run into the mean threshold of this candle and this old low, and then a run back down into here. So that's kind of like how you're going to predict the next few candles. You can see how hard it gets to be to trade or to read this, let alone trade it. There's lots of wicks going on here. They're not acting the way you want them to act. The wicks, yes, everything's important. These precise levels are super important. So it's important that you expect price to give you what you want. Otherwise, don't participate in the market. There's days we've hit some laser precision because it's acting the way we want it to act. When it doesn't, and it gets all wicky and choppy like this, and it just keeps running back through, and it's just not getting out of that range, you know you're in a high resistance liquidity run, and you have to decide what level of stress you want to tolerate to be in that. See, you're just inside this range, 50, there's 60, 72%, or 62 to 70% retracement easily there. And now you're back up inside here. You're bouncing. You've only got one array to really work off of. You want to see support off of this, stay inside that one and go higher. And you got to break above here at 683 to go higher. Otherwise, you're looking down here. And in order to get down there, you need to lose 661 on a close. There, now you're above it. You see? Tap it. Now you want to see it start accelerating again, going higher. Let's get some legs this time. Let's get some speed. This is all waffles and syrup, man. It's failing to go anywhere. We're already into the lunch hour, lashing now, 11:30. So ideally, I'd like to see it take one more little run through here for 12 o'clock and then go higher. Or if we start to really break through this with a distinctive candle, then I'd be more motivated to see this candle turn into a wick. It does, Ollie, it does. You're gonna get up in those imbalances. See them all up in here? Your 5 minute. So you still got to break through those. Your 1 minute one's up here, so it's better to wait for your 1 minute one to get broken on your instead of your 5 minute. As soon as that 1 minute one gets broken to the upside, then we're looking for this range extension. And once you have that, then that 1 minute level, you want to see it hold price. Keep pushing up. This is a slow bird. So those slow creeping, what we call in the fire department out in the country, a duff fire. It's creeping, it's burning underground before it pops through and starts a fire, starts a big old rush. This is a duff fire going on here. I totally agree with you, Ollie. I like the fact you're still reading it, man. I love hearing people still committed to reading the charts and they're not just going, oh, I give up on this. Stay in it, man. Stay in it, because this just will develop a very keen eye of what it is you're expecting. And when you see price not acting the way you want it to act, you know you're not in one of those environments that it's not conducive to putting your money in it. Otherwise, you'll end up losing your shirt. And you can recognize in these environments it becomes hard work, because believe me, it's not. When it's clean, you catch a clean run, oh man, it just goes. Those are just salad days. as Michael would call them. So even that right there, trade above, I want to see it tap this and leave, not come all the way into the mean threshold of that candle. I want to see that just tap it and go. This is just crazy chop slop here. Yeah, and the fact that we keep coming back down, not fun. So good for you to keep studying it, Ollie, man. That's the way to do it. You got to keep practicing. The only way you're going to get good at this is if you just keep studying it, and you're getting knocked around. You saw me get knocked around a bunch of times this morning, but I don't care. I know when it starts to clean up, I'm going to be all over this. And you'll see it when it suddenly starts cleaning up, and then it hits these levels and starts to move, hits the level, you'll see it. It's like the algorithm says, okay, I'm going to start spooling from here. I'm going to start doing my thing. And I'm going to get out of this marking time crap. Raylan, Wave Trader, can you help me identify high resistance liquidity runs and low resistance, please? Okay, so high resistance liquidity runs are, if we're looking for specific arrays to hit specific points, like we're looking for laser precision. I want to see it just tap it, like an order block, tap it and run, right? When you see this constant back and forth and it fails to get out of the level you're looking at, and it just keeps rolling back and forth like this, that's a high resistance liquidity run. You want to see it come down and tap your level, hit it, and then just start running right away. That's a clean, low resistance liquidity run. High resistance liquidity runs are this, when it just, you see how it's just kind of marking time back and forth. Look how choppy and wicky this is, right? That's high resistance. You want to see something, and here I'll show you what low resistance looks like when you get a nice low resistance liquidity run day. Let's get you to all this is choppy. It's all choppy from yesterday. Choppy. Look at that, it's just chop. See how it just fails to get out of this whole region here, right? That's all high resistance crap. And this is already in a different contract time, so it won't show you anything clean in there. So the last couple of days we've been in like super choppy price action. Look at that, just back and forth, back and forth. It's not moving in the direction you want it to do. When it cleans up, let's look for this. This looks like it's starting to clean up a bit here. Our key level, so we're looking for discount boxes and premium boxes inside small ranges. And the moment we break a range, we're looking for support at a certain level. And like this range here, for example, you see this 50% retracement back inside that range or greater. So you see it return back into order block breaker here, which takes out these old highs. And then you want to see it break this high on a close, come back and find support at it. So it's kind of choppy in here. Then also you see it break above that high, come back, tap it, and then start to leave. This is when it starts to clean up, when you see it starting to come back and do the thing you want it to do. So as soon as it breaks that high, come back, give it a tap. So there's the body, breaks this high. You want to see it tap. And in here, when it hit that, you want to see it just leave right away. A couple of more candles of resistance, and then all of a sudden it finally starts to open up. It cleans up when you start to go above this high. You see this fair value gap form, institutional order flow entry drills. You want to see it just pop below there, or 50% of this BISI. then it cleans up. So you see it tap it, and now you want to see it leave right away. I wouldn't even want to see it come back and revisit this candle here. I want to see it just start to leave. Then it starts to get into some cleaner price action for you. So that's when you start to see price in a low resistance run start to clean up. It starts to hit these key levels and start to respond the way you want it to. If it doesn't, and it gets just marks time back inside an area you're expecting price to remove or come from, then you're in a high resistance, like exactly where we are today. This is all banging around inside this range. That's not high resistance or not low resistance at all. Okay, I hope that helps. You'll see low resistance liquidity runs when they start to go and it cleans up. You'll see it. That's true. That's true, Ollie. You're working late. You're working, Raylan. You're welcome. Compare the first 15 minutes of the day to the rest of the day. Low resistance critical fair value gaps, unopened bodies and candles below each other. Contrast to higher time. High resistance fair value gaps get filled in, and lots of time spent in them. Bodies of the candles side by side. Yeah. Usually you want to see a nice, if you see this inversion right here, you want to see it just go one candle, pop up, come back, tap it, and then leave right away. Not go back and forth, especially in here. You see this back and forth inside this fair value gap. You want to see it tap it right there and leave right there. This is just high resistance. It's just not getting out of there, right? So it's just banging around inside these fair value gaps over and over again. You want to see it tap and go, not banging around inside it all over and over and over again. That's just not the kind of environment you want to play in. Pablo, good morning. See how that premium array right here? We've run below it, came back up, tap it. You want to see that get out of there and leave with intention, not just come back and forth and back. And now we're back into it again and tapping, tapping, tapping. That is a sloppy price action. Let's see if I can find you an example of some clean stuff here. See the difference in here? See how it's nice and clean. This is, mind you, this is an hourly chart. Let's go to a 1 minute chart. Let's see if we can give you something that's a little more ish. That's not fun either. Hourly chart. Anyway, so we see here, we got our reversal here. No body gets above it yet. Come back down. Now we get a body that trades above it. We come all the way back inside it right here. We have an exit. Run back up, take an old high, come back this whole 1, 2, 3, 4 candle order block. Comes back, hits it, runs through it nice and clean, tap it, and then take out the highs. Another reversal here. Roll above it. You don't quite come back and tap it there. It just keeps, it runs for the next mean threshold of this candle. Rejection block. Reverse, tap it. Trades below it right there. Comes back up inside it. And then you want to see it leave. Oops. little examples right here on an hourly chart. You want to see body get above it and leave. That's like low resistance. It just gets out of dodge, taps its candle, and doesn't bang around inside this fair value gap over and over and over again. It just gets intentioned and gets out of dodge. That's the kind of stuff we're looking for on a 1 minute chart, 1 hour, daily, all that kind of stuff. You see it's all pretty choppy in here, hey? Markets have been super choppy in the last little while. You gotta be just like Ollie says, you gotta be disciplined to recognize those and stay out of them when you can. Exactly. Just scalp it really. If you're gonna scalp, you gotta be super quick to scalp smaller ranges. Like even this is, you don't even want to scalp that. That's just too choppy. Even in a 15-second chart, if you're scalping in a 15-second chart, look at how choppy that is. Man, that's choppy too. Mean threshold, here's the premium array right here. So if you're scalping that right here, discount box is way down here. Right there. Look at that, box to box. If you're scalping that, get short there, stop loss will be just above here. The moment you take out that candle's low, move your stop loss to break even. You have another reverse here above here. Body trades below it here. You trade back into that candle, trade back into it short there. Look at how choppy that is. You want to see that hit that and start running these lows. And it just smacks around. And then finally rolls over and goes back down. High resistance, even in a 15-second chart. You wanted to see that beautiful here. You want to see a nice little pop below here, come back in, hit it. And if you don't, and this one takes out that low, that's the candle there. You want to see it trade back into it right there. And then this candle just go. Not all this back and forth. That's high resistance. Still stays in it. Finally takes out the lows you're looking for. All the way back into your discount box way down in here in the larger range. That's a scalp, but man, what a sloppy scalp that is too. That's a high resistance run. And back to the cheese grater. So now your only fair value gap in all this lot is from here to here. From there to there. Body breaks below it. You're inside it. You want to see this start moving down here into this discount box now. So like a quick snipe. You're through this one. And you're through this bigger one here. You came all the way back up, tap the bigger one, roll through the lower one. You want to see it, tap it, and keep coming. You don't want to see it just banging around inside here. Tap it and go. Let's go. Get down here. Not run all the way back up into this one. There's the tap. Yeah, nothing wrong with fake take. If you're like 10 or 15 handles, snipe it out of there. But again, you're not gambling on it. You're looking for precision like that for that entry. As soon as you got 15 handles out of that, that was from there, 60, to 48. So there's 10, there's 13 handles right there. As soon as it takes out that low from there to there, 10 handles, move to the sidelines. Take your 10 handles and get out. It comes in again, do it one more time. If it takes that low out there, pay yourself again. That's a super sniper trade setup. That's your own style though. But make sure you're keying off of precise levels. So now I'd be pulling that in right into take profit, or yeah, there you go. Now you've got your next one. So you've got 13 handles to there, and another 13 to 15 handles to there. So you're already up 25 handles just in those two candles. If you key off that level there, aiming for this level right here. Now, if that's your super sniper kind of trade attitude, then make sure you key off of a precise level that you want. And again, I think personally, it's more of a gamble inside here just because it can turn on you so quick. So it hits it again. You can start that whole trade again, and you don't want, then your stop loss will be above here because you don't want to see it run back through that level. And then if it takes that low out again, you pay yourself again. If you're just going for 10 handles. I moved my stop loss into break even, and you pay yourself again right there. Bang. So you got from there, there's 60 to 48. There's another 12 handles. And now we're hitting our discount button. Bang, you just hit it right there. So you've got like 30 some odd handles just out of that. Tap there, go down to the next candle. Tap there, go down to the next candle. Tap there, go down to the next candle, or reach into our discount box. And you keep collecting, man. And it's okay to backtest it, but you got to have a specific level. You've got to know a precise level that you want to key off of. Otherwise, 10 handles, you could say there's 10 handles in every candle here. But unless you've got a precise level and a stop loss and a fail safe that you're willing to use in there, then you're backtesting a futile setup. Yeah, you got to be super disciplined on that. Just that little 3 trades right there. And you're always constantly aiming for this one or the next candle's low. Pay yourself, move to break even. That whatever your rules are that you have to establish here really quickly, then you have to do that. I always wanted to know why it made the dots above and below the candlesticks. Yeah, these are all, this is my tibs. And you can check that video out online here. This is very specific time and price. Michael talks about time and price. This is a precision level of time and price that a tool that you have to be, you really know what you're looking for in order to use them. That's what the dots are for. And you won't find the indicator on there. This is one that we had one of our guys make for us. So there's your discount level from premium here to discount here. So if that's just boxing you're doing, that boxing strategy 64 to 33. So you've got 31 handles right in there. And we made 31 handles just off of those 3 candles alone if you did that one level there. Okay, that doesn't matter. these Tibbs levels. Watch the video there, and I'm sure there are going to be other people that will develop a indicator for that. See, now we've got this lows taken, reverse. You're now above this level. You've just tapped it. Now you want to go higher inside this range. Pull your fib from high to low, look for 50%, and then you've got a small little scalp inside here. And again, you're in now lunch hour, so if this is your scalp, for example, and this may not be your style, right? So there's your entry right there. We just gave that to you. There's 50%. Take half your trade off, move your stop loss to above even, pay yourself cost of the trade, half your trades off. If it hits 62%, take another 10% and move your stop loss to 50. So you're just sitting here and wait. You're earning profit right now, and it's zero stress trade. Okay. So let's say you entered right here on this the high of this candle. So you'll see if that, so you got half your trade off here, and you move your stop loss to just your break even plus the cost of your trade. You'd be up in here. And now we're looking for 62%. And watch, 62%. Now we're moving to 50. Now you're up. You're less stressed. You're even more stressed or less stressed. You've made a portion, another 10% off there. Now you're getting ready to move it to 70. Oops. As soon as it hits 70%, we're going to move it to 62 and take another 10% off. This is just internal range of liquidity. And if it comes back and taps us out, who cares? Who cares? You made money. So you could have like a limit order there saying it will take me out. If it hits that level, I will pay myself another 10% there. Right there, it hits 70. Now you move to 62, pay yourself right there. If it comes back and takes you out at 62, who cares? Or if it hits 75, we're going to move that right up to right there. Oops, crap. Now you move to 70%. You don't want your phone ringing while you're doing that either. There, it came back and tapped me out there. Moved my, that all went to kind of shit on me, but it's 70%. Right there. So 70% would have came back and tapped you out. Had my phone not gone off and pulled that stupid thing out of the way, we would have been all the way up. We would have chased that all the way up real quick before it came down and tapped us out. So you would have paid yourself all inside there from that entry all the way up there. And you can see how that internal range of liquidity hunt is quite quick and smooth. So anyway, there's another method for you for doing quick scalps. Not that rolls over on you now and comes back down again. You'll be glad you paid yourself on the other way up, because there's really no premium above you except for that level right there. And you've just hit from discount to premium inside this range. Does that make sense? Do you guys see the logic of that? And again, you may not want to trade that way, but Roland, if you wanted to see, or Raylan, if you wanted to see a quick scalping method for, you know, instead of risking this, which just seems like craziness to me, if you see this nice clean reversal, and that's the kind of price action you want to see. See how this is low resistance here? See how it just literally comes up, taps your level and leaves. That's what you want to see. That's low resistance. Not all this constant back and forth, back and forth, back and forth stuff. You want to see it tap it and go. You've hit the premium level. Now, if you want to see that come above this, tap this. You want to look for a run above these highs now. You want to see price cleaning up now, just as we go into lunch hour. This would be nice to see this clean up and start running higher. Now, if we don't come back down here, I'm all right with that, because that's the discount box inside the premium range, and it gets us above that It needs to close above here day for 50% of the daily wick or daily candle. So see, we've gone above it, tap it. Now you want to see range extension. Now you want to see it go. Range extend now. Let's get out of here. Take this range out here. And right there, that one's done. Watch for this little guy right here. And you want to see this accelerate now. Start moving through here. Get through all this crap. Now we'll start cleaning up. Watching this thing unfold properly. We get back into a cleaner price action. I'm long 661, reclaiming 5-minute fair value gap. SMT with ES macro. This is what I've waited for all morning. Now you want to see it get out of here, accelerate through this, not roll over and get back into this range again. Don't even like that already. See, it's not acting the way you want to see it leave, not faff around inside here. This has been worked already. There's no reason to be sitting around in here. Let's go. Get out of Dodge. If I pull that guy just to those two alone, right there. Now go. Let's go. Too much faffing. Wait for this level to get taken here. Ollie, if you're in a trade, get yourself to stress-free as quick as you can. Yeah, I wanted to smash through as well. This whole dipping around, smashing around there crap, no, I don't like that. See that revisit? That's 3 candles coming back to tap that now. Let's go. You get 3 candles and that's it. Let's go. You're through the mean threshold of this as well, so you want to see range extension now and aim for this next objective above you here. We've worked, tap it. Now, let's go. Let's get a market structure break here and use this big ass candle right here and then start reaching in for here. Ideally, you want to see this level get taken above you here, get out of all that consolidation that we've been in this morning and start looking to reach higher. But it's lunch hour. It's lunch hour. Prepare yourselves for lunch hour madness. It's been a mad morning. So you want to wait till after lunch, wait for a cleaner setup. Have the discipline to hold on now until after lunch if you haven't, if it's not acting the way you want it to act. See that? not a fun place to sit. So many times we've revisited it here. You want to see that accelerate through here. We keep thinking we want to see it leave, and this is just goes back into crapsville here. So Raylan, that is not what you want to see, man. Just smashing around like this inside this range. See how if it taps it and leaves, that's what you want. And then the moment it just, you could say 3 candles. If it hasn't done it in 3 candles, you know, now you're starting to trade below here. You're looking for a run back down inside this range here. You're back inside this crap, which is not where you want to be. Not where you want to be, man. Now if we extend this one, get out of that right there, and just pull this one back down to this level here, which probably brings us into 50% of this. Yep. It's the 9-10 turn. So you'd like to see that just keep marching higher now. Maybe we'll get our 9-10 turn on our tibs, start pushing this up, and not just get a 10 to a 12. We get a 12 or a 16, 17 coming down into here. There you go. There's the 9-10. Start pushing. Start pushing. That's our reverse that held right there. Came back, tapped it. You don't want to see it trade through that. That's nice. Let's get a body above here now. Come back into this candle's open. 691. Let's get a body above here. Let's go. There you go. Now you've got next price leg higher. Watch this. Take this, go here to here, and then go bullish. Look up here. Look for 2 or 4 banger from here. There you go. Now, what you want to see, remember when I was talking about you want to see it get above this level, create a fair value gap, like a big displacement candle, create a fair value gap, come back, tap it, leave a portion of that open and run higher. That's what we're seeing here. I want to see that. Instead of running too much higher, I want to see it run back, give us one little institutional order flow entry drill right off that level. Right there. Did it give it to us already? Nope. Just give us an institutional order flow entry drill right off of here and then go higher. That's the ideal position, is like come down and go. If we get above this level, come back, tap this and go. That's perfect. If it comes back and gives us that, that's an A plus entry. And then our B is our consequent encroachment. I don't want to get down into this C and D here. Let's see if we close above that level now. We've hit our premium array in the larger range right here. That's good. I like those couple little probes there. Just come back to give us a chance to catch on. Then you can go for a higher run. See if that gives us that. Okay. See where that closes now. We can come back into this level. That would be a long. That's a two banger from here. That's the price leg there. Upside target right there at 18. I guess the first one you could see would be right here at 19,765. And then if we can start eat through that, look for that. If we get on top of here, then we're definitely coming back into this range here. I'd be looking for like 950, somewhere around there. So we can come back into here. I'll add another one on there. I guess it have to be below the mean threshold of that candle. $16, $17, $18. That's tripped in. Now you want to see that stop right there and start going back up. So here's your 18 candle. 16, 17, 18. So I want to see 19 reverse on that and start taking this out here above. Ideally, I don't want to see this get tapped. I want to see that just hold right there on that 18 candle. Don't like to see that. I don't see that fill. Get back into this breaker. See if this breaker holds. There's 70% optimum trade entry. To 19. No, I don't want to see it come back below there. That's it for me. I don't want to see this mean threshold of this candle give way now. It's been validated. So I like to see this like scaffolding now, holding this trade up. If it comes back through me, I'm out. It's not acting the way I want it to act, so I'd be out of that trade. Mean threshold, that's it. And I'll close that out. If we dip below that, I'm out. That's not acting the way I want. So now you wait for a structure break to get above that or below this low here. If that turns on me and goes back up, that's my line in the sand. And I got caught at it. That's my rule. So if we get above that level again, then get the next price leg higher. Now we're banging back off this level here now. Back inside this range. Back inside this range again. Choppy. That's it. Lunch hour. Once again, give money back in a lunch hour. It's demo money, but I don't like giving back anything during lunch hour. I'm gonna have to refocus my afternoon now, get my money back, my demo dollars back. I'm not trading this live, so I want my demo dollars back. See, I would just keep smacking around off this array. I want to see it. I didn't even want to see it get above. As soon as it ran above this and validated it, I wanted to see it just tap the high or the open. That's it, and leave. The fact that we started coming down into it, it's like, no, I don't want to see that. That's not acting the way I want it to act. Again, not clean price action. Not this stuff you want to tap it and go stuff. If it's not giving you that, then move to the sidelines. Take a hit. That's all right, man. that high with the open and leave. Right there. Now get out of Dodge. $722. You want to get above $722. I just realized I gotta follow the rule of wait for the candle to finish before going make your decision. Just put your stop loss there. It either takes it or wait for the candle to finish and then make a decision. Mean threshold held on all of those candles. The wick got me again. It's multiple times that wick's got me on that rule. So I might have to modify the rule of wait for the candle to finish or take the stop loss. That's it. Take the hit or wait for the candle to finish, make your decision, work from there. That would have kept me in on that. Okay, gotta make a new rule on that. Let me screen capture this, and I'm gonna make a note of that. This is when you have to kind of make your screen capture, and this is the area right here I want to save. Save as. Threshold rule. Right there, off this. Stop loss will be going once again at the mean threshold of that candle. I'll wait for this to get, if I get above that level, I'll move to break even as soon as it takes out that high, because I've only got one lot on there. That just pays for the trade. We'll see if we continue to make that high there. Once again, not just let's go. There, hit that upside objective. That gives me my money back for the losses I took. Now I'll move to the sidelines and wait. Take your money back if you can. And that's it. There's the two handles or two standard deviations, and Yeah, I'm out of that. So that's it for me, man. Sorry, I gave you a couple of choppy, shitty trades, but that was the quick one to that level there, just to try and make back that money that I lost on those two choppy trades. So if you could revisit here, see that continue to hold, looking for that upside objective up higher. Just the way the market's and it's lunch hour, I'm not even going to touch this anymore. So that's it for me today, you guys. Thanks a lot for tuning in. Sorry, we didn't give you much of a I like that off of here now. Let's see if this keeps going higher. If not, look for a structure breakdown here. Yeah, so that's it for me. Thanks very much for tuning in, you guys. I appreciate all you. Much love to all you guys. Thank you so much for tuning in. And high resistance liquidity, man. You can get beat up in there. Even the best of us can get beat up in there. So keep your powder dry. Wait for your clean setups, and dine and dash, man, when it's available. See, the days like this, you get beat up in them, and then when it starts to clean up, you're too afraid to take a trade, or it becomes super stressful just because you've been seeing this all morning, and then you take that trade and you go, oh, should I be in this one? Once you can get into that stress-free place, just let it ride and get stress-free as quick as you can. Right? So I do like this level here. Still looking for that level up there at 841 upside. That's it for me. I will see you again tomorrow, bright and early. Take care. Or if I see something good this afternoon, I might pop on this afternoon. I'll be on Telegram either way. So I'll see you guys then. Have a good one.